Subscribe to my channel Report Stock.
Welcome to the deep dive. Today, we're really getting into it, cutting through the noise around Apple's Q3 2025 earnings call.
Yeah, there's a lot to unpack there.
Definitely. We pulled together the key highlights, the surprising bits, and the important takeaways straight from the report and the Q&A.
The source material itself.
Exactly. Our mission really is to give you, the listener, a kind of shortcut to understanding what's really going on inside Apple right now.
Especially with some of these big strategic shifts and those massive investments they're making.
Right. So let's get into it. Let's unpack this. Let's kick things off with the headline numbers. The big picture for Apple's June quarter.
Sounds good.
They reported record revenue, $94 billion. That's up a solid 10% year over year.
Which is pretty impressive at their scale.
Totally. And earnings per share, the EPS, also hit a June quarter record, $1.57, up 12%.
Mm-hmm.
And net income followed suit, another June quarter record, $23.4 billion.
It's striking, isn't it? Just the consistency across all those core metrics. Record, record, record.
Yeah.
And if you sort of zoom out, these aren't just big numbers flashing on a screen. They represent, well, really robust and sustained growth.
Right.
Which, like you said, is genuinely impressive when you remember just how massive Apple already is. Setting new June quarter records means they're not just, coasting.
Yeah.
They're actually managing to accelerate in certain key areas, maybe finding new ways to grow, maybe compelling upgrades are working really well. It's not just market expansion.
So, okay, those top-line numbers are strong. The obvious next question is, what actually drove that growth?
Right. Where did the performance come from?
Exactly. Where did Apple really shine? And were there any areas that maybe stumbled a bit?
Well, the iPhone was definitely a standout, no question there.
Okay.
iPhone revenue hit $44.6 billion. That's up 13% year over year.
Wow, 13%.
Yeah. And CEO Timothy Cook, he was pretty quick to point to the iPhone 16 family being really popular.
Right, he mentioned that specifically.
Yeah. Said it grew double digits compared to the 15 family, and even set an upgrade record.
So is that just a product being strong, or...?
Well, Cook seemed to indicate it was primarily the product itself, strong demand for the features. He also mentioned Apple Silicon helping with Mac records, too.
Okay.
But he did, interestingly, acknowledge a slight pull forward of demand because of all the tariff discussions.
Right. People buying early, maybe.
Exactly. To potentially avoid higher prices later, he estimated it added about maybe 1 percentage point to that total 10% growth.
So a factor, but not the main story.
Not the main driver, no. Seems like the phones themselves were the real engine there.
Okay. And what about the Mac, sometimes seen as, a bit more niche compared to iPhone?
Yeah, but Mac revenue also had impressive growth. It was up 15% year over year, hit $8 billion.
15%, okay.
And they attributed a lot of that to strong performance in emerging markets. It really feels like Apple Silicon just continues to make the Mac appealing, That mix of power and efficiency is finding fans in lots of different global markets.
Makes sense. Now, services. That's become such a cornerstone for Apple, right? The consistent high-margin business. How did that do?
Services just soared. Hit an all-time record, $27.4 billion.
All-time record. Wow.
Yeah. Also up 13% year over year, just like the iPhone.
Yeah.
This segment, it just consistently delivers, strong high-margin revenue. It really shows how sticky that ecosystem is.
Yeah, the value prop seems strong.
Definitely. And, despite some of those background questions about maybe declining Safari search revenue from Google.
Right, that keeps coming up.
Cook really pushed back, just firmly maintained that Apple products remain, quote, very valuable within the ecosystem.
Okay.
So implying they still have plenty of ways to monetize.
Got it. Okay, but not everything was up this quarter, though.
Yeah.
I saw iPad and wearables saw declines. What happened there?
You're right, yeah. Not everything was rosy. iPad revenue was down 8% year over year, came in at $6.6 billion.
Percent down.
And wearables, home, and accessories, that category decreased by 9% to $7.4 billion.
So what was the story? Just weaker demand.
Cook's explanation was that the iPad decline was mostly due to difficult comparisons with previous product launches.
The timing thing.
Exactly, which suggests it's not necessarily, a sign of some underlying weakness in demand. It's more just the normal cycle of product refresh.
Right. You get a big spike with a new launch.
And then it naturally dips until the next big thing comes along. Seems like that's the case for both those categories.
Okay, that makes sense. So beyond the top line stuff, let's look a bit deeper at the financial health. Margins, cash flow, the balance sheet.
Right, the underlying engine.
Gross margin was 46.5%. Good, but actually down slightly, 60 basis points sequentially.
Yeah, that 0.6% dip is, small, but worth noting. Might indicate a little shift in costs, maybe components or the mix of products sold.
And operating expenses were up 8% year over year to $15.5 billion.
Mm-hmm. Investments continue.
But despite that margin dip, the bottom line and cash flow look incredibly strong. Net income, like we said, hit that June quarter record of $23.4 billion.
And the operating cash flow was just robust, $27.9 billion.
Yeah. And Apple's cash and marketable securities. It's just staggering. $133 billion.
That kind of war chest, it just gives them incredible flexibility, doesn't it?
Absolutely. For whatever moves they want to make next.
And you see that flexibility in the shareholder returns, too. They returned over $27 billion just in this quarter.
$27 billion. Wow.
Yeah, $3.9 billion in dividends and a huge $21 billion in share buybacks.
That really speaks to, well, profound financial strength, right?
Yeah.
And a clear commitment to returning that value.
No doubt about it.
Okay, so let's shift gears a bit. Let's talk about the future. Where is Apple placing its big bets? AI seemed to feature really heavily in the earnings call discussions.
Oh, massively. This feels like a huge strategic focus now.
We know they're significantly upping their investment in AI, embedding it across devices, platforms.
And the CFO, Kevin Parekh, was really explicit about it. He said capital expenditure, CapEx, is up specifically because of significant investments in AI and private cloud compute.
Private cloud compute, too. Interesting.
Yeah, he mentioned a kind of hybrid strategy. So they're using both third-party services, presumably cloud providers, but also building out their own massive internal infrastructure.
Okay, so they're serious about owning this.
Seems like it. And Cook even gave a little preview, mentioned they're making good progress on a more personalized Siri.
Ah, the Siri upgrade, finally.
Well, he said they expect to release features next year, and he emphasized the focus is on features that are, quote, deeply personal, private, and seamlessly integrated.
That sounds like the classic Apple approach. Privacy first, on-device focus.
Exactly. Living more on the device rather than just purely in the cloud. It's a pretty distinct strategy compared to some others, really prioritizing that user privacy aspect.
Okay, but this big AI investment, it kind of brings us to a significant negative point from the call, right? These tariff-related costs that are hitting margins.
Yeah, that was definitely a headwind they highlighted. They actually incurred about $800 million in tariff costs just in the June quarter.
$800 million. Ouch.
And they expect it to be even higher, $1.1 billion for the September quarter. That's going to directly weigh on gross margins.
So the obvious question then is, how do they offset that? How do they manage that impact?
Right. And Cook addressed it directly. He outlined a pretty significant strategic shift, actually. Said they're optimizing the supply chain, obviously, but also planning to do substantially more manufacturing in the U.S.
Or in the U.S.? Really?
Yeah, including a massive $500 billion investment over 4 years, building chips in Arizona, other initiatives.
$500 billion. That's huge.
It's monumental, and it feels like it's not just about tariffs, It seems like a bigger, long-term move to sort of de-risk their global supply chain.
Diversifying away from the traditional hubs.
Exactly, building more resilience.
Okay. So speaking of global strategy, China. Always a crucial market for Apple. How did they do there amidst all these shifts?
Cook confirmed they saw 4% growth in Greater China.
4%. Okay. Positive growth.
Yeah, driven by both iPhone and Mac sales, interestingly. The installed base, the number of Apple devices in use, hit a record high there.
Good sign for the ecosystem.
Definitely. And they also set an all-time record for iPhone upgraders in mainland China.
So existing users are sticking with iPhone.
Seems so. And here's a fascinating little detail. He mentioned the MacBook Air was actually the top-selling laptop model in China.
Ooh, the MacBook Air. Wow.
Yeah, it shows that appeal of Apple Silicon and the Mac platform, even in what we often think of as a very mobile-first market.
Interesting. Okay, so looking ahead then, what's the outlook for next quarter, Q4?
Okay.
Sounds like revenue growth might slow down a bit. High single digits?
That's what they guided to, yeah. And Parekh, the CFO, explained why they expect that deceleration. It's mainly down to two things we've already touched on. First, that tariff-related pull ahead of demand. Some sales got booked in Q3 that might have otherwise been in Q4.
Right, borrowing from the future a bit.
Kind of. And second, a really challenging comparison from last year's strong iPad launches. Makes the year-over-year growth number harder to hit.
Got it. So it's more about those specific factors than like a general slowdown.
That's the explanation, yeah. He did say foreign exchange is expected to be a minor tailwind, slightly helpful, but those 2 points are the main drivers of the slower growth forecast.
Okay. Now, Cook also tackled a really interesting sort of philosophical question, didn't he? About whether AI might lead to a shift away from screen-based devices like the iPhone.
Yeah, that was fascinating. His take was basically that the iPhone's capabilities are so broad, it's hard for him to see a world without it.
So the iPhone isn't going anywhere soon, in his view.
Pretty much. But he did say they are considering complementary devices, not substitutions, things that might work alongside the iPhone.
So augmenting the experience, not replacing it.
Exactly. And it really, it begs the question of how Apple plans to navigate this evolution in consumer behavior, right? How AI changes how we interact with tech.
Yeah, it shows they're thinking hard about it, even if they believe the iPhone remains central.
Right. How does AI reshape things? But their core belief seems to be iPhone is indispensable, other stuff will enhance it.
Got it. The call also touched on the ongoing Epic Games legal battle, right? What came out there?
Well, Parek, the CFO, he mainly highlighted the strong services quarter again,
Yeah.
broad-based growth, continued innovation in the App Store.
Which is obviously relevant to the whole Epic case about App Store rules.
Exactly. But Cook, probably wisely, sort of avoided speculating directly on potential court rulings, especially regarding things like Google payments.
You have to focus on performance.
Pretty much. It kind of shows how they're navigating these really complex regulatory and competitive issues while still trying to deliver that strong service growth.
Makes sense. And one last point, circling back to the supply chain diversification we mentioned, Cook gave another update.
Yeah, a really telling one. He confirmed that the majority of iPhones sold now in the US are actually sourced from India.
The majority from India now.
Yeah. And that other products are increasingly coming from Vietnam as well.
So this isn't just talk, it's really happening.
It reinforces that this global diversification alongside the big US investment isn't just a minor tweak. It's a pretty fundamental reshaping of how and where Apple actually builds its products for the future, building resilience.
Okay, so wrapping this all up then, what does this deep dive tell us? What should you, the listener, take away?
Well, I think we've seen a company that's still firing on many cylinders, posting record revenues, driven by really strong product cycles, especially iPhone and Mac.
Right, and that services sector just keeps booming. Incredibly resilient.
Absolutely. And then there's this huge strategic commitment to AI for whatever comes next.
Yeah, that feels like a massive bet.
It is. And at the same time, they're actively managing these big global challenges, like the tariffs, with these really substantial long-term shifts in their supply chain. It's complex.
It really reveals a company that's innovating, yes, but also adapting constantly, right?
Yeah.
To economic pressures, geopolitical stuff.
While strategically investing billions in future tech like AI, and of course that incredible cash generation lets them make these huge bets and return massive value to shareholders simultaneously.
So lots going on. What stands out most to you from all this? Is it maybe the iPhone just continuing to dominate despite everything?
That's definitely compelling. Or maybe it's the sheer scale of the AI investments, hinting at what the next Apple experience might look like.
Or perhaps it's that quieter, but maybe just as profound, shift in the global supply chain. A whole new manufacturing map being drawn.
Lots to think about.
Definitely. Well, thanks for joining us on this deep dive.
Been great talking it through.
Until next time, keep digging for those insights.
Subscribe to my channel Report Stock.